But what I really wanted to talk about, John, I did listen to your podcast. I downloaded it yesterday about the markets. About they think there's going to be an oncoming crash.
We're just about to talk about that with Jonathan Davis again. Yeah, there is going to be a crash. The crash is happening, but go on.
Yeah. Well, after one thing that nobody's mentioned, I don't think, after the problem was before, it was called subprime mortgages, I think, when that all fell through. Well, people were looking for the next thing to put their money into. And it's, what people, if you're not a big wig on the stock market, then you think your house, the next thing you think about, what's safe, you think gold's safe. Gold contracts could be the next cause. I mean, a gold contract is a theoretical way to buy a certain amount of gold. And what's been happening is they've been shoveling more and more higher numbers of gold contracts out. But the problem is that the set delivery months where these are supposed to be coming out...
It's gone past.
There's contracts, and there's not enough gold to fulfil the contracts. So it becomes like a pyramid scheme.
Yeah.
And people have been pumping money into this. And they reckon with the gold contracts, if that really goes, excuse my language,
tits up. We're allowed to say tits, we're not going to say F or C, but we'll say tits up. Go on, carry on.
Yeah. If those contracts, it all turns out that there's not enough gold to finance those contracts, and it all goes tits up, they reckon it within 48 hours, everything will shut down.
Good point.
The entire financial system.
Okay, well, you sit there, listen to this, because Jonathan Davis is going to talk about that next. Nice talking to you. Jonathan Davis is our Economist Wealth Manager. He's starting his own podcast here on Talk to Me Radio very soon. He is our financial expert. We had him on yesterday. I'm fed up of speaking to him, but he's back on today because it looks like everything he's predicted is happening. Hi, Jonathan.
Hello, John. It feels just like yesterday I was speaking to you.
I tell you what, my wife thinks we're having a relationship. Hey, listen, let's start with what Steve just said about gold. Is there any truth in what he's saying?
There's a great deal of truth in what he's saying.
Right.
And in a nutshell, the mutual funds, the exchange-traded funds, where you can invest in gold, these funds themselves are meant to have a base of gold bullion.
Yeah.
You'd think that would be logical. The problem is that for every ounce of gold bullion that they hold, there's something like, well, it's hard to know, between 100 and 500 ounces actually invested by real people.
Oh,
so, of course, if all of these people said, give me my gold, deliver it to my house, well, clearly the fund would have to suddenly go into the market and buy vast amounts of gold. Well, as to whether or not it would bring down the whole economic system, I'm not sure. But in that scenario, it would certainly increase the price of gold overnight, probably by 1,000%.
So this other tweeter says the gold contracts is the same as the fractional reserve banking system. It's all rubbish. It's a Ponzi scheme. It is like it was before with the subprime mortgages. There isn't any actual real money here, is there?
The whole banking system, particularly in the West, but essentially all around the world, is indeed the biggest Ponzi scheme in history. And for those who don't know what Ponzi means, it comes actually from Charles Ponzi in the 1920s, who sold investments to half a dozen of his friends, and they sold investments to half a dozen of their friends, and so on down the line. Of course, there was nothing actually there. So what they were buying into was thin air. It was a promise, which of course was never kept. So since then, every scam of this kind has been called a Ponzi.
Right.
And the banking system is the biggest Ponzi in history. And equally large is government finances. When you consider how much, for example, our government owes £1,600 billion.
I'm laughing because it's so ridiculous. Go on, carry on.
And that's only the amount that they admit to. On top of that, you've got unfunded state pensions.
Yeah.
There's no fund there.
Yeah.
You've got civil service pensions. There's no fund. You've got the PFI schemes for building the roads and the hospitals.
Yep.
You have got potentially 30 or 40,000 billion pounds of debt, or at least obligations that our government has got to pay for. And who is our government? You and me.
Robbie Wright on Twitter says, can you ask Jonathan what all of this is going to do to currencies, especially the euro?
For the last few years, and it's been speeding up in the last 12 or 18 months, there has been going on a global currency war, is the phrase that they're using. In essence, pretty well every country you can imagine, barring a couple I'll come to in a moment, has been going through a process of devaluing their own currencies in order, they say, to help their exports. The currencies that have been revaluing, that have been going up in price, are the Swiss franc and the US dollar. Because ultimately, global financial risk has been rising for the last couple of years. And in times of heightened risk, money flows into the Swiss franc and the US dollar. That's continuing. And actually, what that means for you and me is as the dollar rises, it creates deflation in the system, because to give you an example of, say, oil, of course, is priced in dollars per barrel. And as the dollar rises, you therefore need fewer dollars to buy the same barrel.
Yeah.
So if the dollar goes up in price, the barrel of oil is still a barrel of oil, but you need fewer dollars to buy that barrel. Therefore, that's one of the reasons why the price of fuel at the pump has been going down, because the dollar's been rising. So we have global deflation because practically every country has been devaluing its currency, and that is likely to continue for the next few years. Now, your man asked about the euro.
Yeah.
The euro is a currency in crisis. The European Central Bank can do whatever it wants to keep the value of the euro, but ultimately there's not a lot it can do about it. The euro is trending down. It's been trending down for years. The fact is, it's got some strength the last couple of months.
Yeah, it's gone to about 130. It was 120 at one point, wasn't it? 125 to the pound.
Well, in fact, the pound was, you could buy 1.40 euros. It's now 1.3. So the pound has been going down against the euro, or more to the point, the euro has been rising generally, so it's not just the euro pound. And actually, the euro is likely to do pretty well over the next few months. But on a medium-term basis, or a medium-term view, the euro is a dead currency. There's nothing supporting it. I would expect the euro to restart its major falls in a few months' time.
Okay. What has happened since yesterday? We spoke yesterday, but since then there's been turmoil again, hasn't there, in the Asian stock markets? And how's this all going to affect? I mean, obviously, I suppose you take no pleasure in the fact you predicted this happening months ago, but it's happening even quicker. The speed is really, overnight, seems to have not accelerated. And the speed of that acceleration, if you follow what I'm saying, seems to be getting quicker as well.
Well, it seems to be, and I think that's the operative phrase, because the mainstream media, which of course you and I absolutely adore, the mainstream media is finally picking up on the reality of what's going on out there.
Late as usual, of course, but there we are.
Exactly. They always pick up these stories after the fact. So, stock markets have crashed 25 to 50%. Literally, currencies, I was saying yesterday, against the US dollar, they're down 20, 40, 60, 70%. I mean, huge crashes in the in the economic system right across the world. The Chinese stock market, second largest economy on the planet, down 50%. To give you a few examples of what's going on out there, oil, to give you one more, as you know, down 70% from $110 a barrel to $30 a barrel. Now, these things don't happen if all is well. On the contrary, there are great ructions going on in the economic system, and as I've been saying to you over the last few weeks, it seems likely, no guarantees, but it seems likely that 2016 is 2008 Mark II.
Do you believe a major European bank is going to collapse? People are talking about Deutsche Bank, one of the biggest banks in the world. Is there a danger that that could happen?
It's not a question of belief. What I do is I follow what's actually happening in the markets. And you'll remember the iconic phrase from Yes Minister, never believe it until it's officially denied. And it's an astonishing thing, but both Deutsche Bank and Credit Suisse, as you say, two of the largest financial institutions in the world, have both in the last 24 hours put out missives essentially saying, our balance sheets are fine. Well, it's the most remarkable thing, because I tell you, John, if they were fine, they wouldn't be saying it.
Is that a bit like the chairman saying he's got full confidence in the manager, and then the next day he gets the bullet?
It's exactly like that. And as I said to you yesterday, and you can see it in many examples in the banking system, Deutsche Bank, the share price of Deutsche, the largest bank in Europe, and that includes the UK, the share price is lower. Well, at the open this morning, it was lower than the lows of 2008, the banking collapse of 2008.
I've got one final question, and I need to answer it quickly, so I've got to move on. Is it wrong, Danny Mills says, to call this country one of the richest in the world whilst we have so much debt, Jonathan?
It's totally wrong, but the thing is, pretty well every country you can think of is awash with debt. We do not have the wealth that you imagine, and perhaps we can explore that at another time.
Yeah, another day. And also when you start doing your own podcasts as well, which we're really looking forward to, Jonathan. Thank you very much indeed. Your Twitter handle, if people want to follow you, is?
It's Jonathan Davis, with the O being a 0.
Okay, it's dead simple. Follow him. Thank you, Jonathan. See you tomorrow, probably, the way the markets are going. Robbie Wright says, fantastic answer. Please thank him. Thank Jonathan. Well, he's gone now, but I will. Right.